Hi, my name is Nancy Wittenberg, and I'm a commercial agent and a syndicator who specializes in multifamily, making money, and motherhood. Today's video is about how to calculate NOI, also known as net operating income. Before we get started, there's two ways that people generally do accounting. Your first one is sort of the easiest, and it's also done for the smaller complexes and smaller businesses. It's called cash basis accounting. How that works is when you receive a payment, you mark it in your books. When you make a payment, you mark it in your books. The other side is accrual accounting. When you know you're going to get a payment, you mark it in your books. And when you know you're going to make a payment, you mark it in your books. And there's ways to do that. This is not about bookkeeping. But the way that I have worked this out, this particular example of how to calculate NOI is based on accrual accounting. With that said, again, I'm going to talk about the formula for NOI. It's income minus expenses equals NOI. That's as hard as it gets. The categories are what you really need to be concerned with. Income is rents. So in accrual accounting, you assume that everyone's going to pay you on January 1st. Now we know in reality that isn't always the case. We'll get to that in a minute. So this is assuming that all of the units are going to pay. Other income could be anything from laundry or a soda machine or charging for covered parking or anything along that line. Loss to lease, let's say for example you've got Fred who moves into a studio apartment and he's paying $400 a month and he moves in January. The same unit, only next door, is going to go for $425 in June. Now, in your computer system, how you're going to track that is the rents assumed for those units is $425. Loss to lease could be the $25 that you're not getting from Fred. It actually counts here. So in the computer system, you'd be expecting for rent $425, although you know he's only going to pay $400 because that's what the contract is. So the loss to lease in this example would be $25. Then you've got your vacancy. Chances are you might not have a full house. If you don't, then that counts as vacancy. All right? Now let's talk about expenses. Expenses can be anything from staffing, advertising and marketing. You've got repairs and maintenance, any contractors like landscaping, and also taxes. What you will not see included in here is your debt service. That is actually below the net operating income. Other items that are below the net operating income, in addition to your debt service or mortgage payment, would be your capital expenses. For example, let's say you redo your roofs, you paint your exterior. Those large ticket items that are only done every few years or every 10 years, those are going to count as capital expenses and they do not count as your ordinary operating. So if you have any questions, please let me know. This is not fully encompassing everything. This is just an overview in order to get started. If you have any questions, please feel free to comment to this video or contact me. I can be found at www.emergingmarketsinvestors.com. Thank you and have a fantastic day.